Welcome back. Welcome back. All right, we got 10 minutes to close. Couple of notes with the market. Been trading flat since starting lunch, right? We got the early pullback, led into just completely flat lunch. Coming into close, that's where, again, breakdown, consolidation. What is this? Breakdown of the trend line. We need to see, get some confirmation on that idea. And then also which direction. In terms of rotations of tech, value, what's it going to be? This has certainly led to some significant plays for us today. We always talk about when the market's a little bit flat, kind of hanging out. We're basically break even on the day almost, besides this new candles coming in. It's led to some significant moves up and down on our side. We're gonna go over after close, but let's see what we get in here. Obviously, X. Big moves today on X, which was, from where we entered, we did not enter on a lot of our rules. We took that trade on expectation. So it's certainly nice to get paid on that. So let's see what we get here coming into close. Again, we're not looking for what's the next candle here on the 5 minute going to be. What's a closing price? We want to know what this week is going to be, right? So we're looking for answers on the week. And again, in terms of when we're looking at the average here, from what I just said earlier, for us people jump back in here, a lot of what we see here on the average is not a good representation of anyone here's trades and how we're trading, because again, we are trading some significant breakouts. So when we look at this, do not take that bias as anything in terms of our positions. What we do use the average for, and the market average for, is understanding an overall supply and demand bias to understand if there's going to be consolidations, corrections, big breakouts, that sort of mindset that leads to adding more, taking some off, this sort of idea, right? So again, as we watch, and again, we're just break even. We're just trading flat right now. There's nothing really critical going on here. There's nothing really to take as decision making. That's why we're wondering what does the week look like with what we've seen. All this looks like is take profit from really a really strong end of the last week with some fear buying, right? And so over here, we're just continuing to trade flat, and until we see something with the average, we're not going to make decisions on this here, of course. So what do we got here? We've got 7 minutes. Seeing what this develops into. I am curious on further value coming in bid at close. We are on this chart, so I'm curious about more bid coming here. I think, again, when you think of the X chart from earlier, right, when we were watching that moment where I'm sort of have that understanding that institutions are going to be looking for that. This is also in a similar spot due to really some of the money or some of the flows going into the tech side, some of the bigger names out there. Do expect some of the value ideas to come back through here at close and into the rest of the week. So we'll see how that continues, especially looking at what did well today. A lot of those charts that we consider value in retracement charts did well. That means there's going to be future value, right? Keep those ideas in mind. Gold thoughts, the same as always. It's tied to the dollar. If the dollar's going down, gold's going up. Right now, that's not what the dollar's doing. The dollar's not going down. The dollar is, first of all, it was risk on. This is also a situation where you have the breakdown, but it's also risk on for value. Over here, my expectation, like I said this morning, is that the dollar will climb back up. That causes the gold to continue to go down. So sitting in a gold position, we in terms of gold, this is not, I'm going to look at this after close, but I'm going to really talk about this right now. We took the gold trade over here and drove it up into this area, right? As soon as it started to reverse, we exited the position. So if you're not trading it technically and you're holding it long, then you don't care what happens day to day. If you're just a long gold holder, you don't care about what happens day to day. And it's sort of like what I tell people that are holding shares in companies. It's like, my analysis is not going to help you. If you don't want to trade it like we do with the breakouts and then selling it on reversals, then just you're holding it long and you don't really care about day to day. And none of this really matters, because otherwise you've been holding for no reason. So I would just say, If your idea is to hold gold long, yeah, gold's going to go up in the future. So it may go down for 6 months. I mean, there is no such thing other than on a short term sort of technical understanding that we can certainly track at that level, but not on the other level of larger sort of out there positions. Let's see. Not seeing much action here at all. Close. I'm really happy with a lot of our positions here today. Really happy with some of these positions. In terms of anything that needs to be transitioned, nothing really to note. I think that's sort of an interesting change from today, from Friday. We had a lot of things to transition from Thursday to Friday and over the weekend. Today on Tuesday, there has not really been. It's mostly just we have confirmation of those entries from Friday, and of course we're going to go over those. And none of those really need to be transitioned, which is really nice. It makes trading so much easier that we just can push one position, be happy with it, and then also on the sell side, those charts from this open that we need to take profit on, we're just yes or no decisions, right? And that's exactly where we want to be. We want to keep it, especially right now. I talked about we're keeping things sensitive, tighter stops. That makes life so much easier. You get stopped out. You don't need to decide. Your stop's there. Those kind of decisions. 3 minutes, you can see prices doing nothing. Absolutely nothing. Absolutely nothing on the average. Sure, you can talk about this wick all you want, but this is a level all the way across. That's again, that's our sweet spot. This type of trading on the average, which is why we watch this. This is you in the sand pit building sand castles over here. That's why when we go over these positions, you're gonna see it. This is literally what we sort of look for, and that tells us it's go time. Time to make some plays, right? That's where our breakouts. That's where we gain alpha. Everyone else is getting break-even average today. Pretty sure everyone had a pretty damn good day. So, how much time we got? We have 2 minutes, minute 50. In terms of things that close, I'm not going to call out any positions for close here. Certainly not taking it off of what we've already done. So watching this wrap up in terms of volatility as well, we have not seen anything that signals anything here come close. This sort of rise in volatility right here, like this tiny little bit, is not backed up on the derivatives. So in terms of this would need to have continued, it's not. And so we talked about this earlier, that if the derivative is not backing up the spot VIX, then there is no increase in volatility. The value doesn't matter, it's the movement. This is not consistent movement. If there's no consistency, then there is no accuracy in volatility. You need consistency. Otherwise, spikes back and forth are literally just volatility acting as itself. No paid actors here. All right, got 50 seconds. This is a good opportunity to figure out, for some of your positions, what you're doing if you haven't already. If you haven't already decided what you're going to do on some of your positions, maybe you should figure that out. I don't think there's anything of note. There is literally nothing of note, so I'm not calling anything out. We will look at positions here in a moment. 20 seconds. Everything is flat. Very nice end of the day. No surprises. No surprises whatsoever. Very happy with the end of the day. This is going to be a very good week for us. Very good week for us. Keeping everything on a trend, consistent, sideways trading in the market to finish the day off. That's perfect. There it is. There is the close. Woo. One note. So let me start this off. Those of you heading out of here, obviously have a great day. I'll see you in the morning. Watch out for charts tonight. Let's break down the day. But first of all, I do want to mention for the Unrefusables Fund. We cashed out of our position. 1094. 1094 was the average. 1094 is the average. Tonight, I'm going to post the values. I'm going to open up the new the 120%. Whoa, 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 whoa. Let's not. First of all, congratulations to McKeezus. Congratulations to McKeezus. No, it was a. There you go. I'm gonna post it tonight. I'm gonna add it. I'm going to add it into a new account, and I'm gonna have it API'd, and so it's gonna be a fresh account, not in my own account. That way we can actually, or whatever comes hereafter in terms of the positions, everything, it's gonna be in a fresh account, and I'm gonna post it through into the Discord. You'll see that stuff tonight, and then we're gonna vote at some point over the night into the morning for new positions, and you'll have it. You'll see how it's going to be set up. So again, we are working with over $3,000 in cash now. So McKeezus with a successful trade to start off the fund, and again, everyone's gonna be able to vote. You're gonna see it. I'm gonna write out rules and shit because there are a few things that we have to do so we don't get windbreakers on us, because apparently it's a problem to dick around. And so either way, very successful trade. That is cashed out. So keep that in mind. Let's go over everything for today. In terms of macros in the indices, everything traded basically flat. We opened up strong, of course, coming out of a very strong in bullish Asia sort of session. Here's the Hang Seng from what happened earlier. We talked about this move coming into this week, and a lot was dictated by this. We actually saw a lot of positions do very well. We went very bullish on Chinese tickers again over the weekend, so of course did very well. So that really led us off strong. But of course, when it comes down to it in our market, we're just continuing the trend. So however you want to look at this day, all it really comes down to is a continuation of the trend. And it doesn't really give us any new information. So we just continue with what we've been doing, right? The dollar hasn't broken back out. We just saw that. The other macro is not showing us much. Volatility staying subdued. So in terms of that kind of day, this is basically a flat and sort of straightforward day that there's not much going on. And what happens on a day that there's not much going on, I was just saying it earlier, we start to pop off on those days. In terms of our positions, ours and is, the charts that I post for breakouts do extremely well. And they've consistently done so. And we usually use these kind of days as confirmation for whether or not we're doing with the right mindset and we're looking at the right positions. Take a look through this list here. And again, the best example of this would be the X chart today. You can go watch the video from the stream before if you don't remember or you weren't here, right? This is a consistent phenomenon. When we're looking at this down here from last week, first of all, we had entered here, re-entered and added more. Over here, we talk about this idea of converging supply and what happens, right? Now, this is pretty bearish. And yes, usually we wait for a breakout. So you could have entered today at support as well because it would have been a technical break. We preempted the trade because we knew what was going to happen, right? We preempted it. There is, again, this idea that it's impossible. It's impossible. You can't know what's going to happen before it happens, just like you can't apparently know when to sell before a crash happens. These kind of ideas are just incorrect, right? And so again, this trade here is really a great example. X up 12% today. That's a 100% trade. It's well over 100% now, even if you bought just at the monies. They're well over 100%. They're well over 100%. If you're missing this trade, and you're in this chat, if you're missing this trade and you're in this chat and you're in the call right now, or you're in the call earlier, or you're listening to the recording and you were here last week, then you're just doing something wrong. You're just doing something wrong. And this may not be for you, right? And so, again, heart to heart, and the reality is that if you're missing these plays, then you're not going to do well on the ones that are harder to see and harder to execute. This is a yes or no trade that you've had many days to be prepared for, right? Now, if that comes down to like a confidence thing, or I don't know, you're broke, well, then those are problems you're going to need to figure out. But I just want to say it now. Again, not everyone's going to be a trader. Those of you that are having a hard time, which is not many people in here, then you should probably just stop. Okay, just to be honest with you. So keep that in mind. For those of you that are cashing in on a great X day, congratulations on another successful trade. This is a brilliant trade that, guess what? It's just the first day. Think about it. Your contracts are already up over 100%. What are they going to be if they come back to the high here? Does anyone remember what we made here? What was the percent here? Or does anyone remember what the percent was from this trade? This absolutely banger. This banger of a trade of 170%. Some significant numbers is what they are. That's where you go from 2 zeros to 3, right? When you go to 3 zeros on the percent side, and then your broker can't even register the third zero, and you have to actually widen the column. You have to widen your profit percent column so you can see that third zero, because it just looks like a 3-digit number, but it's really a 4. Then you know you're doing something right. For those of you that aren't usually on the sell side, I know you can only have up to 3 digits with minus 100, right? You can't go minus 105 and then go to 1,000, right? So I guess you guys don't know. But anyway, to keep things simple, this was a great trade. Okay, my favorite trade from last week, QFIN. Let's just be honest. If you missed this trade from any of the discussions from this, you could have missed it on this break, and then you finally saw me transition it here and buy down here. And then if you somehow missed it again from here into today, then again, you're just not paying attention. And there's just no reason to even be here. If you're not able to get these type of trades, these are not even alerts. They're just like slaps in the face. And again, I don't want to be gloating and things like that, but I do want to make it obvious that when it is obvious, you have to take the trade. Otherwise, you're not going to be able to make profit, right? Because a lot of the other times you're going to be sweating and having a hard time. You got to be able to make those trades. LX, if you were not able to make this trade, you're also getting a slap in the face. You have to be able to make these trades. I talked about it again from open. I brought it up. You have to be able to make this trade, okay? You need to go back. So for those of you that, I'm going to go in the profit section in a second, just to before we start going over more positions and talking about the rest of the week, just to cap things off, you are going to see a significant difference because the people that are making that just, let's say they have these positions that I'm trading over here. Let's say you have 10 of these positions and made 100% on those 10 positions. If you've only had one of them and you made 100%, but it was only 5% of your account, then you only made 100% on 5% of your account. Whereas other traders are making 100% on, let's say, 80% of their account. That's a significant difference. That cash difference is a big difference. I talked about it earlier today. And so I want to emphasize the difference between being able to push this and you're talking about an entire portfolio percent going up compared to just a situation where you've got just one good trade and then your other trades are losing, right? I'm going to just, before I jump in the profit section, mention again, this big trade from Friday, buying CCL at open, knowing that this was the time to take it. You didn't need to wait for today, right? Again, if you weren't here, then I implore you to go back and watch those streams. I've been uploading them on YouTube so you can watch them. You can see it on the chart. You can see, and again, it's not just to see, oh, wow, look, other people in my group made money. Great, I feel shit. No, it's to see why we took the trade, because you need to see it, because I can't push the button for you, and no one else in this group can push the button for you, even as they're calling out the tickers that they're obviously trying to get into, that we're watching, right? Go back and see why we did it. That's what's important to see, is that as we're watching it live, like we do every open, right, where we're watching price live, you need to see why we're taking the position, or why I'm sort of rationalizing and emphasizing it, to understand, so that the next time this happens, you can go get this. Because again, you're missing 100% trades. These are from this move from open to here. Before this even got up to here, it was 100% trade. That's a situation where you go make that trade, and if you're able to do this consistently, then yes, you can start talking about a 100% average. Otherwise, you're not. You're going to 7% with the rest of the S&P. 7% on 100,000 is pretty good, I guess. Why not 100% of 100,000, right? Why not more, right? Think about the differences. All right, let's have some fun and jump in the profit section here. Holy moly. Look at these numbers. Let's take a look. JGR with the classic 5K on the day. Again, if you guys, half this group has quit their day job. The other half don't quit your day job. JGR with the 5,000 on the day. That's a great That's a great profit for the day. Obviously, I'm guessing we'll have to see what he says in the morning. He is, of course, has a ton of unrealized gains like the rest of us. So great gain there. Good job. Met with the 10%, 238. We will take it. That's 10% a big number. We'll take it. Ecto with the 5.2. 5.2 a day times what, 280 or so every day of the trading year. Whew. That's a lot of percent. C Trader with the 270. That's a big number. Mobsky +3 was -8 at one point. Well, that sounds like a fun day. So it sounds like he got it back on track. Great job. Brian with the 112, 112 a day for 280 days a year is not actually terrible. That is a day job. So that sounds like a little more fun than working the day shift. Or if you do have a normal job, folks, then a little additional income is good. Tiger Shark with the -3. We know he's got long positions that he's holding, so I'm sure that's no big deal. But we got Chris P with the -1, mostly tied to company stock. Makes about the same sense. I'm sure, I know he's got some healthcare stuff that will certainly be going. Spoon with the 7%er. That's a pretty damn good number as well. I like that. 7's pretty lucky. Nice numbers, guys. Obviously, today, listen, I would say still, based on that profit section, I think you can see the difference. And I want to emphasize it, and it's no shame on anybody for anything, but I do want to point out the difference between the people that are trading, what we are looking at and what I'm talking about in here, and when we look for the breakouts and are consistently just making the same thing. There is no, searching and looking for hype and everything. They're just following simple rules and making these trades. It's consistent, and that consistency obviously pays itself. When you're talking about, for some of you, when you talk about like, let's say some of you are doing like 250 a day, that number, when you start to conceptualize it, some of these things start to stand out. And when you start to make trades where you're capturing moves where it's 10% on the underlying every single day on trades, you're talking about over an entire year, a significant amount. And so again, even those that are on a smaller scale, just remember what that looks like when you start to compound that and put that over an entire length of time. Some of the people here that have been here for like a year now, JJR is a good example. JJR, by the way, is the first member of this group. He went. It's too bad we don't have the logs anymore from the prior group. If you saw the progression there, right, and take a look at the way that his trading started to where he is now and the way his account has turned, right? This is where from when we started and then talked about, okay, who's going to join the $1 Million Club? Yeah, well, now look at the group. Half the group is over that. When we talk about the differences in the group, we got half the group is underneath that 100,000 mark, and then the other part of the group is over the 100,000 mark, and most of those people are significantly past the $100,000 mark of just their trading account, right? And so when you start, again, it doesn't take, once you figure it out, right, and you get that consistency, and I always talk about the quote that's always stuck with me, is you get rich very quickly. It takes, obviously, quite some time and learning to get to that point, but once you get to that level of understanding, the timing that it takes to get a significant amount of money happens very quickly, because if you're able to consistently grab these 100% trades and understand when they're coming, you're going to talk about turning even a $25,000 account into significant money very quickly, right? 100%, 100%, 100%. That's doubling up that you can just consistently do, right? And that's over just 6 months. You're talking about a significant amount of money in a quick amount of time. Right, so keep those ideas in mind as we go forward, because again, it's not that it's a competition, but you do want to obviously compare yourself to the average. That's important, and we talk about the alpha idea, missing this TME trade on the breakout, these sort of yes or no trades. It's important to understand that there's no such thing as, oh, well, I just missed that one, and that's okay because I was actually watching this other trade, and I didn't really do anything today, but that's the trade I wanted to make, so that's okay with me. And you start to go through these ideas. Let me just see here. You start to go through these ideas where you're trying to rationalize why you missed it, and there's some excuse. You can't be making excuses, right, about why you miss things. If I miss a trade, then it pisses me off, and I want to know what I did wrong. so that the next time I go I can go make that trade. No matter how small of a position I put on, I want to go make that trade, right? So keep these ideas in mind because again, I know we look at a lot of positions and talk so much about some of these positions that have really take off, and I'm being serious. You should honestly, you should take it seriously. Like when I tell you that if you miss this play, there's just you can't be missing this move. Well, then, you got to figure out what you're doing wrong, right? And so keep these winners in mind and realize that if you were right there and you were watching it, that if you did make those trades, that you'd be in a different spot than you are now. And it doesn't take much, right? It really doesn't take much in terms of you just got to hit one button, right? You just have to hit one button. You just have to hit one button. So, that's as far as we'll get on the sentimental stuff. In terms of individual positions, again, travel really giving us the best confirmation of our idea from Friday. And again, it doesn't matter what just happened today. It matters how this continues into the rest of the week, right? We're not here to make one a day trade from end of Friday into to open today or anything like that. We're looking for a week's worth of value, right? We're not looking, I mean, if this is it, then it's it. But that's obviously not the point of the trade, right? We're looking for a lot more value up here. When you look at these charts, there is a significant amount to still be had here, right? When we talk about trading in levels from support to resistance here, you start to look at this and you look at this consistently across the market. Those are big trades. Winning, right? How many winners do we have out there? We take this trade and you have to be able to understand that it's not just from entering here and then you get a 3% on the underlying move here today. 3%, oh, well, I saw some of your other charts and they get a lot more, so they matter more. No. It's about being able to get into this trade here so that you can push it up to the next level. This is the trade. This is just a part of it, right? And it's being able to get in that position to capture it. Because guess what? If you wait till today, or you wait until Wednesday, tomorrow, to push it into next week, those kind of things. Yeah, you can make that, but it's so much harder to trade. It's like when Brian asked about the Zoom trade earlier, and I tried to make like a spiel for everyone about it. It's like if you're waiting to figure out how to buy this today, well, you've already missed the part where you could have bought here, and yeah, you're trying to make the same move, but you're buying halfway in the move, right? Yeah, you could still make money, but it's so much harder to manage. Everyone that bought down here is already on a beach drinking a pina colada, doesn't really care. Over here, it's pretty damn difficult, and you're going to be sweating at night, trying to figure out what you should be doing. You're going to wake up in the morning, your girlfriend's going to be pissing you off, and you're just trying to trade. These type of things start to bother you more. People that today were down on positions, everything bothers them. They're in a pissy mood because they're losing money. Being in that mood in those areas sucks, right? There's nothing fun about it. And so that's why we talk about capturing moves. We bought PDD here on Friday, going over the weekend. Yeah, it took profit from the open here today, down 4%. But guess what? You bought over here, you're still up over 3.5%, so you feel fine. You don't even care. But if you bought somewhere here today, you're probably sweating. You probably already lost money. Right? And it's in these type of situations where there's a reason why we buy and enter when we do, and that should be the easiest part of your trade because managing it is the next. Exiting with profit is the difficult part, right? And so you don't want to have to, during that time in the position, be worrying about it. You should have an idea already set. When you think about some of these semiconductor trades and everything, right? NVIDIA continuing here today, asking, how do I trade this now? Why didn't you ask how to trade it back there when we all took the trade, right? And this is where for some of you, the next level, for you to up your trading to the next level, a lot of it is a lot of you are waiting to see this happen first before you then, let me even take the drawing off. A lot of you are waiting for this to start to happen first. And so now over here, you feel comfortable that the move is happening. Now you're in the situation, which is exactly what we look for, which is we're entering down here to sell to you up here. Because now you're coming around to it, right? Now you're saying, oh, this looks like a trade I could make. It looks good. Yeah, it's going up. Exactly. You're proving the point of why why we buy down here. Because if we're a buyer down here and everyone else is a buyer up here, well, then that tells us everything we need to know. That's why we buy on support and sell resistance. You are the resistance, and you're going to fill us. That's the reality. And so, again, you can't wait this long to say, oh, this is a good trade now, right? If you and I go, if we look at a chart together and I say something's bullish and something's bearish, right? All of this is junk. This is just tightening and consolidation. As soon as this candle starts, I know and we know it's breaking, right? And so we're going to capture the move that happens because it's completely different from anything in here. Completely different. Even if you can capture this breakout, of course, and then we understand when it's selling. But this break is, of course, it has a different feel to it where the market is. And so if you're having a hard time getting there, and again, it doesn't need to be perfect timing. We chase perfection. It's obviously hard to do. And all you can do is hopefully get your timing down to be able to gain more and more percent. And you'll see people in this chat that have lowered that timing down of being able to capture a breakout. First of all, we use the supply levels and everything for a reason, because that's as close to perfection as you're going to get. But you'll see that from the differences from being able to buy, let's just call it this level here, from buying here and buying up here, you're talking about 20% or so on the options. That difference, and even if it was shares, that difference of like 10, 20% of, it's like padding. You know, I make the mattress joke every now and then. This idea of having padding in a base is comfortability. And that allows you to also, from being comfortable, push a position and actually turn it into something. Because when you don't have that and you're always getting back to that break-even point and your account just seems red all the time, right? And it's not the good red where, not that there's any good red for accounts, but when you're taking red from the top of your profit, like say you're up 30% and then you lost 5% on the day, you don't really care because you know it's a part of the process. If you're at 0 and that goes to -5, well, then that sucks ass, right? You don't want to be that guy. That's why we don't buy when there's a chance for price to go down. We don't buy when there's a chance for price to be turning the other way. We only buy when it's one way. We don't drive on the wrong side of the road, and you won't see me driving in Europe. I don't even drive here. So let's just be honest. We only buy when the price is going a certain way, and especially for those of you with options, we don't hold anything past the red point. If our contracts go red, you're out of the position because your stop should be right at where you entered. With those of you with shares, obviously you're trading differently, but since a few of you are in here, I would just say that, listen, if you're in here and you're trying to learn from this method that works with options, you maybe should, we're trading things. I'm going to bring up the EH chart in a second, but you should certainly think about trading it in the same way that we trade it, which is just trading the breakout and taking profit on reversals and when supports break. Because that holding is going to cause you're starting to bring in other reasons that you're trying to rationalize why it's okay to hold the position when it's really not, and you're lying to yourself. Like you're just straight up lying to yourself of why you can be taking a loss on a position. You can just buy later, right? If price is going down, like let's say you bought over here and then price starts to go down, just exit the position and buy at a better point, right? You can always re-enter if you sell. There's no such thing as not being able to re-enter. Even people in here that have we have some weird positions where people have 100 grand in a stock, right? That hasn't moved. And it's okay, it's not like you can't just go exit that 100K in 5 minutes. Yeah, you can. Just go exit it and then go buy at a better point if it's going down. These type of things are just, it's bullshit excuses and it's just ignorance, and you just got to be honest with yourself, right? And so even with shares, I'm not going to be lenient with some of these things because again, it's silly, and especially for some of you that know better, you're telling yourself that because you don't want to be wrong. It has nothing to do with the money. You're willing to lose the money to be right. No, that's backwards. It should be the other way. The price should prove the point. It shouldn't be that you're trying to prove your point and hopefully price will go your way. No, you wait for price and react. I'm going to mention the EH position. Obviously, this is shares. This was a lot of fun. Apparently, there was a short hit piece that went out. In terms of how this went, we talked about taking this break here. Now, this was a major move, right? If you took it from this here, we were up over 50% on the underlying. From the open over here, it was over 70. This move here is a significant move. Now, where is our break even, or excuse me, where is our relative reversal point on this move, right? So if you entered on the break here, again, we exit on a clean and obvious reversal. Your break even, why do I keep saying break? Your reversal point is halfway between this trend, right? And so it's somewhere over here, and it should always go to some sort of psychological level. It's usually this high over here, which is about $100. $100 is where my stop was. I was getting triggered way before that in terms of market orders. So again, if you put a stop order, it should just be, I mean, I guess it depends on your broker. It's technically just a market order. If you put a limit order that's the limiting below 100, that doesn't make sense. So when people have asked before, yes, technically you're doing a limit, and that's where the algos come in. And I'm going to show that on IB. I don't know if I'm going to have the video up tonight. But what you're going to see is that you want this to be basically a market order, because you're not going to be sitting in a position and then saying, oh, yeah, I have a stop in there because I'm willing to lose a little bit. I'm willing to lose another 30% before I get out. No, it should be triggered as soon as it's happening. And I'll show you on the, let me delete this before it screws it up. As soon as this is reversing, you do not decide when to exit this yourself. Okay? So I want to square one. So the opening candle is right here. Okay? Here's the 930 candle. Nowhere in here, if you entered on this trend line break, you should not be saying, oh, I'm going to get out of this position. You don't decide when this shit happens. You don't decide when tops are. You react to price. You should be getting stopped out from this. Over here, you're getting stopped out. You don't sell. No one here sells. You get stopped. That's it, right? And so again, when we talk about pushing positions, there should never be, unless we talk about the 2 daily candle sort of pattern where you get, let's say the candle ended right here, and then the second daily candles opens and that starts to sell, that 2 red day sort of thing. Only if the position is obvious that we can push it through those 2 days do we ever not take profit, and we would take profit. In this sort of situation where it's 1 day, you're just getting stopped out, right? Because this sort of volatility on a chart like this, there's no such thing as being able to guess. Just like on this day here, this move from here to here is over 10%. Are you taking profit in that? No, you're not taking profit on that, even though it's like a 12% spread. Same thing here. Even if it's news-based, you get stopped out at $100. We talked about already that your stop should have been tighter anyway. I'm sure some of you get stopped out way before that because you have way tighter stops than I do. Keep that in mind. And in terms of being able to get filled, we have their shares. Nobody here had a position that you couldn't get out of. No one here is a big boy. Not even the whales in the chat. So keep that in mind. This is obviously, I mean, look where it came down to. It came down to support, possible support buy. Don't even get me started, okay? Support buy, Don? Look it came to the trend line support. It stopped right there. It looks pretty good. I mean, you never know. I mean, it traded very nicely through here. It's going to be a bit of a meme now, so I wouldn't go touch it. Leave it alone. That was the biggest loss of the day. On the other sell side charts, I'll bring up nail, but since this is leveraged, it's a little bit harder to look at. Obviously, this is a position we're pushing long. This sort of day here, again, comes back to the way we've been trading, which is as soon as your level breaks here, you're getting stopped, right? As soon as our level here that we've had on the chart for a while gets broken, you get stopped out. Now, this is a position that we want to push long. This is a chart you can't screw around, though, because this is the leveraged. If you're in the ITB chart, this is the 1X. This isn't really much of a move if you entered from down here. So this, again, it would need to be a relative reversal. I'm guessing you're already out of here, but depending on things, I would say that there is a chance that if you bought in over here or over here that you're still in that position. The other example would be the DXY chart. Of course, you're not. We haven't even entered this chart yet. In terms of what this move signifies, it's just the timing. You lost some tempo. Of course, we're still looking to get this on this trend here. So there is a good opportunity probably coming from this pullback. These charts, though, we're waiting for a break now. We talk about this a lot. We buy on support, sell resistance. When there's a rejection at resistance here, we don't buy right underneath the resistance, right? If the price is here and it dicks around for a little while, we're not entering it until there's a break, right? Only on those charts where it's clear, right? We have clarity of what the price move is doing. There's some sort of tightening leading to the upside. Then we take it. This is a good example of a chart that we're waiting for. transitioning on, right? We're in a transition phase. We took profit. Now we're waiting for that next entry. Those ideas in mind, right? In terms of other charts, EV wise, we're still waiting on the EV move. We're looking at this breakdown in terms of Tesla, and then keeping in mind sort of the reasoning behind it, which is the supply, which is really supply and demand, with the demand going over here. These are all consolidating together. Consolidations lead to new breakouts. In terms of what the move is going to be, we already had Tesla starting to break down. More of a wider consolidation than the rest. So we know those are going through some sort of phase. So we're going to continue to watch those, but not be looking to be buyers, of course, on any of those. The only chart that we're looking for would be something like Ford here. GM is a little bit further behind, so not exactly GM yet. But we're looking for these moves to be breaking over here. A little bit of that upside breakout feel, possible continuation wedge, continuation triangle, ascending continuation triangle. These kind of ideas are coming in. We're not going to be, frothing at the mouth to go enter these things, right? That's not the kind of traders we are. We trade the breakout, or if there's a very clear support buy. So keep those ideas in mind. Same with the Neo chart. We've already talked about this a bunch. We took this trade here. We pushed it through. We didn't sell immediately, but as soon as this came in, right, as soon as it was not going, and we had that 2 daily candle, we talk about this candle pullback. It's a rejection with 2 daily candles. We took profit. We're not going to get into that position until this breaks. Of course, got pretty close today. That's from the China sort of, the demand going into the China sector. Didn't go, so you're not entering it. The only chance is if there's a clear support sort of buy, like over here with a nice bullish candle, right? So keep that in mind. I'll go over the solar move as well on the downside. SunPower, as soon as your trend line breaks, right, what's happening? You're getting stopped out, right? Your stops are on a trend. You're trading on a trend. That doesn't mean that now your stop all of a sudden is going to be, did you enter on a horizontal support here or on a trend line? No, you entered on a trend line. That's where your stop's going to be then. You already turned your head, right? I talk about you got to turn your head a little, right? Turn it to the left. This chart's going this way. Turn your head a little. This is support. Your support broke. That's a rule. Support breaks, you exit. Obviously, there's a little bit of an error in there. It's not always exact. That's pretty clear, right? It's pretty clear in terms of this trade. What are you doing? You're waiting for this move here or for the price to come back down into this trend line over here. What is this forming into? It's forming into a bit of a continuation triangle, most likely, right? See these trend lines in here? These 2 wicks lined up? This over here is forming some sort of lower trend line, and my bet would be on that it's this trend line here that's coming in as support, right? Take a look. You extend that trend line, you see the wicks through there, right? And price sort of trading through here. See the wicks, all these wick touches? This wick touch here, that trend line I just copy and pasted. That's most likely the move, and so what you're getting here is a bit of a continuation triangle. Again, we don't, until there's a breakout, we're not going to act like we know. But just to emphasize, this is likely the situation here, right? You have some sort of situation like this, and then to the upside. Are we going to take the trade now because we think it's going to go up later? No. We're going to wait for it to come down here, and more than likely wait for it to actually break this trend line instead. You don't get to make up your own rules and decide when something's good or not. You don't get to decide when the top is. You don't get to decide when the bottom is. You don't know. The market doesn't know, so you certainly don't, and you're not going to guess. Until the move happens, we don't trade it, right? So keep this in mind. This is more than likely. Let me make this like a different color or something, just to emphasize it. And so keep that solar idea in mind, that those are most likely going to be pulling back a bit, right? Even when we talk about the ETF, look at this, broke through the level. It's going for a little bit of a consolidation, right? It's been making a move. It's not always going to come. The other side of semiconductors, other than all semiconductors are super bullish, the one that's not is AMD still, and I keep talking about it. In terms of opportunity cost, those of you that are still have already turned the corner to profitability, right? And you're just always looking for what's the position that's going to pay me the most. Again, when we talk about semiconductors being bullish, we've continuously avoided trading AMD. Again, you can see the relationship here. This is not getting the same demand as the other tickers, right? So you can't have money over here and continue to get mad and upset that the other positions are blowing past you when it's been obvious, right, that we shouldn't be here. If this makes itself clear to us, right, that this is a trade to be in and that there's going to be some sort of convergence, right, that this is going to catch up, then we'll go trade it. But right now, the price is not telling us that, right? Even if you look at this through just without any ideas on this chart, this is just sort of trending downwards, right? There's nothing good about this yet. So again, we're continuously pushing our bullish sort of understanding on the semiconductor front, which is UMC, TSM, NVIDIA, right? There's a few others that we, of course, always bring up, but I just want to emphasize some of those ideas because, again, when we talk about which tickers to be trading, you need to be trading the tickers that are putting the points on, right? And just because it's the same idea, same ticker, and then that's the one you like because we're not talking about it and not trading it, and you want to be like novel, that doesn't make you better than anyone. It just means you're losing money, and there's no point. And you found it, and my ticker, it doesn't. Who cares? Making money is a lot better. Who cares, right? Where is the MJ chart? MJ, I want to talk about from Friday. The ability to take this trade as well is important to understand. This is I mean, if you miss this trade, I'm not gonna shit on anybody, of course. This idea of buying this on Friday is something to just see and understand through the question of, has anything changed here? Of course, you're not holding through this. We took profit. We took profit here. We talk about the transition, and the reason why we take profit here is not because we don't want to push it anymore. It's because of our transition rule, which is from this move here, this was a significant gap, a 20% gap, and it's above this in it's a completely new chart at that point. This is a territory we don't understand in terms of supply and demand. We took profit on this move, right? We took profit on this move, and what we're doing is as we take profit, we're looking for the new entry. Price pulled all the way back, right? There was an entry here to take, which most of us did, and then as this finished off, we talked about this being a hanging man, right? This is a hanging man, a bearish candle. That was an opportunity to take profit, and if you held, then you knew to take profit on this trend line break here. So you would have gained from here to here and from here to there. Now over here, what we talked about was on this candle that nothing had changed from these 2 days other than taking profit from up here, and we're looking to re-enter. We re-entered on Friday. This move here of 10% today, confirmation of the move. You don't exit it. You continue to look to push this. This chart looks very good for the possibilities of what we talk about with price movement making this move, right? And I drew it earlier just to reinvigorate it, is this idea that we look for this sort of move where, again, this is, whether it's daily candles, 15-minute candles, intraday, we look for that kind of confirmation of an idea, right? If you're looking to trade through this level, you wait for it breaks through, and you wait for it to pull back to buy it, right? That's how we trade. There's times when there's clarity and it's obvious that this is breaking through and it doesn't need to pull back. But more times than not, we're waiting for it to break through and then pull back to buy it, right? It's such a big difference that, again, we can look at so many different charts where this move, we're not buying on it just breaking through because of, again, the possibility of it breaking through and then pulling back down is greater than if it bounces, right? If it's able to stop there, the possibilities of it going to the upside compared to just when prices just started to break it, it's more than likely that your risk reward is going to be better to wait for the bounce than to take it immediately. Risk reward and the amount of profit you're going to make due to the losses that will happen from this move, it's better to wait for this and have a bounce. And so we talk about this a lot. I'm not saying that this somehow dictates how you should have traded it from here to here. That's a completely different trade. But from over here, this sort of pullback into the next upside, it does form a similar idea. And so just to show that, whether it's intraday, daily candles, patterns are generally the same. Obviously, daily has a much higher probability of being accurate. And we talk about that in terms of consistency with volume in orders, right? There's a lot more consistency over day to day than a 15-minute candle to another 15-minute candle. There's so many more variables that could or may not be active during that time. You could have 100,000 volume compared to like 10,000 volume in the difference of intraday candles. So that doesn't help with supply and demand, because there could just be a ton more supply sitting there and then the demand stopped for a moment, right? These type of ideas will cause price to fluctuate intraday, which is why we're daily traders, right? In terms of trades tomorrow and breakouts, these trades that we've had, we're now in that management mode. None of them had to really be transitioned today. We're now in management mode, waiting for that transition point. In terms of take profit and cash to put into new positions tomorrow, I would likely say that this idea of today of trading flat in the market, leading to big breakouts on our trades, is going to continue. And so if the market is trading flat again tomorrow, and I would say it's more than likely going to, right? You might get some bid from the open if we open a little bit lower, right? Due to just Asia being so hot. Again, this HSI chart, this is leading more money into tech. So I'm guessing tech is going to be a little bit more bid tomorrow again. Again, that's relative. It's a bit relative. It's a little bit more liquidity based. So depending on how this trades tomorrow, which historically it should just trade flat and not put as many points, which leads to volatility falling a little bit, not spot VIX or something, but IVs. So premiums probably drop a little bit on some of these trades. So that should lead to a little bit of a lower open in terms of some of those options, and we should be able to buy at a better price. So I'm going to post some, I already have seen some candles. I would be looking at those short-term patterns that I post tonight, the bullish ones for your entries, the bearish short-term patterns for maybe the ones you need to take profit on tomorrow if they get confirmation. And so those in conjunction with the most recent charts that I posted being extremely bullish. Again, these charts have been very bullish. There's really, again, there's not many sort of levels to these. I'm not meaning like horizontal supports or something. I'm talking like the difficulty. They're all yes or no decisions. Peloton today is really the only one that broke down from this resistance break. In terms of this trade, again, this is volatility just showing itself. This sort of thing, of course, you're managing off of a stop basis, and you're just getting stopped out on this trend line more than likely. In terms of Chewy, the same thing. Historical take profit day, you had a 9% gain. This quite literally came to halfway into the candle, which we talk about. We're looking to continue to push that. Obviously, still up significant amount. But again, these charts, they've all been extremely bullish, right? I've talked about it. These are all very bullish charts. Keep watching these and look through all these February. And I would say some of the tail end January charts, look for those because, again, these are extremely bullish. You need to just figure out where these levels are. This chart, it's hard to buy here today, but if it opens on support tomorrow, it's pretty easy yes or no decision, right? So keep these ideas in mind. The most recent charts, and then again, any charts I post tonight, don't expect them to right after the breakdown or right after the breakout, like lose a few points. A lot of them are either going to open on support or open below the resistance, and that's all you need to know, right? For that entry or not. I would be using those, and I wouldn't be. You don't want to be second guessing whether it's a trade you should take or not, right? I'm going to just show this chart again just to wrap things up here. This kind of trade here, let me turn this to support. I post the chart here. Price opens. Did price open above the level? Yes. Okay, that was your question. You answered it. Now all you're going to do is buy it, right? There is no, well, what should I wait? Like 5 minutes? Should I wait 10 minutes? What should I wait for? Now you're asking the wrong question, right? You're asking a question you don't need to ask. That means you don't have the confidence you need to do it, right? You don't care about the intraday movement on this chart, for instance. There is no such thing as looking at this intraday. A lot of these, there is no such thing. Other than understanding on a market average that there might be pullback during lunch, there is no such thing as looking intraday on some of these charts, okay? You buy it open, and that's it. If you get stopped out, you get stopped out. That's what's supposed to happen if it's not going to go to the upside. That means you have your cash back quicker so you can enter a new trade, right? So just to keep it AMKR, okay, that was the other, right? That was the other semi that we talked about, right? This sort of trade, there is no such thing as, Okay, do you care what happened intraday here? You care what happened intraday here? I mean, this is it. Okay, here's your questions. Okay, is it a reversal? Well, here's the trend. Obviously, it's not a reversal. Is this starting a possible reversal? Did it post a lower low? No, it has a higher high. Does it have a it has a lower it has a higher low, has a higher high, but the candle's red dawn. But is it up? It's up 3% today. It's still trending up. This sort of thing where it closes lower than it opened, I think throws people off. It's a good example of a trade that no matter where you entered it, and most of us entered on this candle here on the big day, this is just converging to the other to the other semiconductors, right? But again, I mean, if you're missing some of these trades like that, and then if you're missing it, then you missed it. You can't then go back and say, oh, okay, I'll just go buy it now. No one is buying. You can't go buy this over here. There's other charts that you can go trade that are just breaking out. It's not that this can't go up another 20%, but buying it here makes managing this trade almost impossible. There's no such thing where you bought it today and now you're gonna be able to manage this easily. No, buying it over here, it's really easy to manage. There is no decision you have to make, right? And so, in terms of a chart like this, again, those that are in position can keep pushing their position. They could be on the beach. They don't even need to look at their broker. Half the people here don't even look at their damn broker half the time. They take the lunch break that I take seriously. They don't look at any charts during lunch. I don't look at shit during lunch most of the time. I don't. If there's a market crash, guess what? I get stops there for a reason. And what's the likelihood of that happening? Very low. So we don't think about unlikely things, right? We go off of probability. It's the same as like, well, if you go outside, you could get hit by a car, so you better not go outside. You better not drive a car. There's really high chance that you're going to get in a car accident. Don't drive, right? Maybe you shouldn't. Maybe even sitting in your chair, it could break. You could hurt yourself. Maybe you should just stay in bed, right? You should never get out of bed. And I guess that's maybe a mobile trader thing. But, again, we don't think about ridiculous things all the time. But we also don't trade in a ridiculous manner where we buy up here, for instance. No, there's other charts that you can buy to go capture this move because that's what we're trying to do here, right? In terms of this week, again, should be a very good week. I would say compare yourself to what we look at this week. So I'm going to talk a little bit more. Again, I'm not going to be gloating or anything like that. I'm going to be talking about in a pure alpha standpoint of beating the market. In terms of how we trade, you should be beating the market average this week, I would say. If you didn't beat the market average, which was break even today. Today, the average was 0 across the market. If you didn't beat 0% and you lost points, then that's a significant problem. And then in terms of whether you're at 0 or not, if you were 0, well, then you were average. That's okay. You can be average from day to, every now and then. That's okay. But as we go further in the week, you should be seeing your trajectory go past the average, right? Otherwise, you won't be profitable, right? Because again, you're going to have a day that you're going to lose. Maybe there's a day that, you're pushing a position the way you're supposed to, and then there's things out of your control and you're not able to get filled, and you try to take profit and it's just not happening, right? There's these type of things. There's got to be a little bit of risk involved. You push something over a weekend and the risk doesn't pay off, right? Maybe, some of your trades lose and it kind of brings you back to break even though you had 100% on one of your trades. These kind of things are not always going to be consistent. You're not going to be perfect, right? And so you got to take the gains when you can. So again, about 20 charts or so today from Friday that were entered. That again, if you missed them from Friday, well, then there's no getting it back. Today, you could have fought and ran as fast as you could, and you would have stayed in the same spot today. It doesn't matter how much you ran today. If you didn't start running on Friday, you ended up in the same spot because these trades were from Friday, right? Maybe you got X from open, right? Maybe you got CCL from open. Sure, but you can't consistently do that. You got to be able to capture it. So keep these ideas in mind. Yep, Ecto's running. Everyone else had to start running. I'm out of here, guys. Again, watch out for what I post. We should have a very eventful morning. I would say those of you alert hunters, watch out for the alerts. I will see you guys in the morning. Have a good one. The video may or may not be uploaded tonight. I'm not 100% sure. And more than likely tomorrow, if not tonight. That's for the order entry video. It's going to have hotkeys and shit like that. I think that'll be a bit better than the super basic one that will address some of the limit orders and algo orders. I will just quickly say before the video, if you are trading a smaller account, like under 100,000, you don't need to use the algo, right? You're not filling an order that's needs to be masked or anything. So just use a normal limit order, okay? For those of you that were immediately wondering. I've already DM'd a lot of you, but just use a normal limit order. There is no difference. If it asks you to use an algo order, that's not the same thing. That's completely fine. You can use the algo on every order. I'm talking about this specific adaptive order that you have to select, okay? Use the normal limit order. Do a normal limit where your limit's 392 here. You won't get filled on anything above 392, and that's it. The adaptive one, I'm going to go over it. A little different. Big boys only. I'll see you guys tomorrow in the morning. Have a great night, morning, evening, wherever you are. Enjoy.